Hello, everyone. Today, I'd like to talk about a major shift happening in international banking and corporate structuring. The reality is simple: offshore banking is becoming harder than ever. And by 2026, businesses that fail to adapt may find themselves facing rejected banking applications, payment restrictions, and growing compliance challenges. Let's look at what's happening. What's happening globally? Across the world, regulators are introducing stricter financial transparency requirements. The Financial Action Task Force, or FATF, continues to strengthen global anti money laundering standards. In the United States, FinCEN reforms are increasing reporting obligations and ownership transparency requirements. Financial institutions are also facing new payment transparency expectations, requiring greater visibility into where funds come from and where they go. At the same time, governments are implementing more comprehensive digital asset regulations, bringing cryptocurrency and digital finance activities under closer supervision. Together, these changes are creating a more transparent and highly regulated global financial environment. Why banks are rejecting more applications? Many business owners believe banking applications are rejected because of the jurisdiction they choose. In reality, banks are asking deeper questions. They want to understand the source of funds. They want a clear explanation of the business model. They want full visibility of the beneficial owners behind the company. And every application is subject to increasingly sophisticated sanctions, screening, and compliance checks. If information is incomplete, inconsistent, or difficult to verify, approval becomes significantly harder. The death of the traditional offshore model. For many years, companies were established primarily for tax efficiency, but today, low taxes alone are no longer enough. Regulators and banks expect substance. They want to see real operations, genuine business activity, employees, customers, suppliers, and a clear commercial purpose. Compliance expectations have increased dramatically. Businesses must be prepared to provide documentation, financial records, operational evidence, and transparent reporting. The era of anonymous offshore structures is rapidly coming to an end.
Why Hong Kong and Singapore are winning. While some jurisdictions face growing challenges, Hong Kong and Singapore continue to strengthen their positions as leading international business hubs. One reason is their world-class banking infrastructure. Another is their strong international reputation among banks, investors, and financial institutions. They also benefit from high levels of regulatory credibility, giving financial institutions greater confidence when onboarding businesses. And perhaps most importantly, they provide efficient access to international and cross-border payment networks. For globally active companies, these advantages are becoming increasingly valuable. What businesses should do today? The businesses succeeding in today's environment are taking a proactive approach. They build strong compliance files before approaching banks. They clearly document transaction flows and expected payment activities. They maintain accurate accounting records from day one. And they select the right jurisdiction based on business objectives, customer markets, operational requirements, and long-term growth plans. In today's world, preparation is often the difference between approval and rejection. The businesses that thrive in 2026 will not be those looking for shortcuts. They will be the businesses that embrace transparency, structure, and regulatory credibility. If you're expanding internationally and need help with company formation, banking, compliance, or international structuring, contact Lion Business Company. Our team helps businesses build the right foundation for long-term international success. Thank you for watching, and we'll see you in the next update.